meine sehr geehrten Damen und Herren.
Ladies and gentlemen, good morning. I'd like to welcome you most cordially to this year's annual press conference to present the Annual Financial Statement 2013. The last year for us certainly was also and further characterized by the crisis in the European Monetary Union. It is good to see that adjustment processes made substantial progress and that the crisis symptoms that become apparent in the financial markets have undeniably decreased. So amongst others, the confidence levels amongst market participants last year has increased quite clearly, and also the spreads on government bonds from those countries that are most severely affected by the crisis have gone down. One explanation for these spreads going down is also the fact that those countries have made substantial progress with the necessary structural adjustment processes. In most countries, competitiveness of corporations increased and exports also picked up perceptibly. At the same time, private households and corporations reduced their debt levels, and public deficits have also been markedly reduced thanks to consolidation measures on both the earnings and spending side. In part, however, the financial markets seem to be running ahead of progress made with the adjustment processes. Nominal interest rates for long-term government bonds have already dropped below pre-crisis levels in most of the periphery countries. Looking at the situation realistically, however, it is still premature to declare that the crisis is already at an end, especially if this was to give rise to the impression that the adjustment process was finished and that there was no need for action anymore. This becomes apparent from the fact alone that numerous countries continue to be struggling with a very high level of public and private debt and are also struggling with a worryingly high level of unemployment. That is why substantial and persistent efforts continue to be necessary in order to achieve a lasting solution to the crisis and its underlying structural causes. In this context, one thing remains very important to me. It is politicians that hold the key to overcoming the crisis and not monetary policy. We at the Bundesbank have supported a number of crisis measures in the euro system, and as you know, we take a rather critical view of some of those measures. However, we do agree with the Governing Council of the ECB that with those crisis measures we can only alleviate the symptoms of the crisis, but we cannot rectify its root causes. Some measures are problematic in principle and by nature, even though they might, in the short term, lead to an alleviation or coverage of the symptoms. And that is because they make a therapy addressing the root causes less likely, because they may delay necessary structural adjustments, or because they can lead monetary policy into dangerous territory. For all crisis measures in the euro system, it remains essential to allow no doubt that central bank policy continues to aim at securing price stability in the euro area. For that reason, those measures must not lead to a situation where other fields of politics believe that they can shed responsibility because monetary policy is ready to step in. That would mean that monetary policy strays into the territory of fiscal policy from which it might find it difficult and hard to return to the straight and narrow path. The credibility and, in the end, also the independence of monetary policy would thus be put at risk, which in turn would compromise its effectiveness in reliably ensuring price stability. In order to overcome the crisis, it remains important for politicians to achieve further substantial progress in order to regain the necessary trust and confidence in the functioning and the stability of the monetary union. This includes that all member states need to put their public budgets and banking systems in order. And it also requires that those countries particularly affected by the crisis continue to implement the necessary structural reforms in order to become more competitive. And also, one of these necessary measures is that the regulatory framework of the monetary union is reinforced and made coherent. The banking union is one very essential part of that kind of work when it comes to the regulatory framework of the monetary union. And this, no doubt, is a tremendous project, and it constitutes the largest change in the European financial architecture since the introduction of the euro, which was now 15 years ago. The banking union will be resting largely on two pillars. One is the single supervisory mechanism, SSM, located at the ECB, which will work according to uniform rules and high standards. And the other is the single resolution mechanism, SRM. At the beginning of November last year, the corresponding EU regulation entered into force, on the basis of which the ECB will take up the supervisory activities on the 4th of November of this year. Until then, amongst others, there will be a comprehensive balance sheet assessment taking place with 128 banks, amongst them 24 German banking groups, which are categorized as significant at the moment. And these kinds of banks and institutions will in the future be under the direct supervision of the ECB. The balance sheet assessment will be carried out by the ECB in close cooperation with the national authorities and the European Banking Authority, EBA, and a stress test will also be part of that assessment. The construction work for the banking union requires considerable effort and also ties up quite a large part of public attention. However, with all that, we shouldn't forget that it remains important that the single supervision with the ECB does not lead to any conflict of interest with the single monetary policy. In the course of the past year, the world economy has picked up speed again. In the euro area, there are increasing signs as well that the economic recovery process that began in spring of 2013 will continue, although some burdens due to the crisis continue to linger in some countries and dampen the economic development quite perceptibly. What's encouraging, though, is that most of the countries affected by the crisis in a particular way have by now overcome the recession. Given that the economic development points upward but remains somewhat subdued on the whole, and given that price pressures are expected to remain low for the foreseeable future, an expansionary monetary policy stance is appropriate for the euro area. Our current forecasts do not indicate that inflation for this and also the next 2 years will see any large increase. That is true for the entire euro region, but also for Germany. At the same time, with a view to the expected phase of economic recovery, there's also only very limited risk that in the euro area we are going to see a broad-based deflation, that is, a self-reinforcing, expectation-driven process of decreasing prices and wages and salaries. And that's something that also Mario Draghi points out repeatedly. Although the expansionary monetary policy stance is definitely appropriate in the euro region at the moment, it also has to be clear that the low interest rate environment cannot be here to last. In this context, I can understand very well that individual savers are somewhat annoyed if their savings deposit are actually losing in value in real terms for individual years. But we shouldn't overlook here that this low interest rate environment, also in Germany, does not just hold disadvantages for many citizens. Home builders and owners profit from it when taking out a loan. Corporations find very good financing conditions and terms, which also helps securing jobs. And the public sector pays less interest on government debt, which at the end of the day can ease the burden for taxpayers. Citizens, after all, are not only savers, but they also have some other economic interests. In connection with the low interest rates at the moment, I believe it is particularly important that we can always rely on a situation in which monetary policy lives up to its mandate, which is also preserving price stability in the future. And also, an exit out of the low interest rate environment should not be delayed unnecessarily because of potential fears of potential financial stability effects, for example, especially if this would mean that other political areas are not doing their job. The German economy has also picked up speed again in the course of the last year. It thus recovered from the brief dip in the winter of 2012 and 2013 and should thus, on the whole, be back to normal capacity utilization. During the recovery period after the financial and economic crisis, it was mostly external impulses that drove the upward development in Germany. But for a while now, growth in Germany has also been sustained by domestic activity. The economic drivers, therefore, have changed. The reason for which is the rather robust nature of the German economy. That is expressed, amongst others, in a comparatively low unemployment rate, a lasting increase in employment, and in perceptible increases in wages and salaries. Taken together with the low interest rate levels, those factors are fueling housing construction in particular. An increase of the consumer price index in the amount of 1.5% compared to the previous year. Also, the price increases in the last year were moderate. The HICP inflation, measured with a harmonized index of consumer prices in the euro region, was only slightly below that at 1.4%.
Der staatliche Gesamthaushalt war im Jahr 2013 ausgeglichen.
And general government posted a balanced budget in 2013, and the overall budget thus hardly changed compared to previous year. General government debt ratio, however, continues to be too high, but it was reduced perceptibly in the course of the last year. Taking a look at public finances in Germany, it remains to be stated that political projects and sound public finance are not necessarily contradictory aims, but have to supplement each other. Especially in view of the favorable underlying conditions at the moment, the high debt ratio, and the foreseeable budgetary strains due to the demographic change, it is therefore advisable to seek to achieve a structural budget surplus. Back to the economic developments and economic outlook. All in all, the picking up of speed in the course of 2013 should be something that we are most likely to also see in the current and also next year. Against this backdrop, we can presume that also employment will continue to increase, although these new jobs will mainly be taken by new immigrants attracted by the labor market situation in Germany.